Hello everyone, I'm Marty and welcome to my May 2025 real estate market update for Vancouver, all of BC, giving you an update on where we stand today. So let's jump right into it. I just taken all the latest stats, got them all plugged in, worked on this all day for you to get it out early. So let's have a look at what's happening. So jumping right into my table for May, you can see the year-over-year activity is, of course, down on detached. I've taken out just the west side for the year-over-year pricing because that's where a lot of you are asking on the pricing. We're about 10% down from that peak of last spring. Give or take, it does vary between product, but that's overall generally where we're at on pricing compared to that spring peak of 2024. For houses, of course, we're down last month about 0.6%. Now, April was not the best month. A lot of people were sitting on the sidelines waiting to see what's going to happen, and that's the result of that. A lot less product sold. We've been busy, but overall in Greater Vancouver, it's been fairly quiet, not a lot of activity, and that resulted in a marginal price drop last month. Now, attached townhomes down about 24% year-over-year activity, and prices hit a little bit harder than the detached, about 15% just on the west side, and down about 1% last month. And of course, condos activity down 20% year over year, and on the west side about 5%. Condos held a little bit stronger because a lot more people in the bottom of that pyramid buying entry-level product, and prices down same as houses, about 0.6% last month. Okay, so overall we're finding that activity is certainly lower than it was this time last year, but the prices year over year, give or take, if you take your assessed value that you got in July, from July 1st, created at July 1st of 2024, that's based on the spring pricing. We're around assessed, many of the sales just below that, just to give you a rough indicator of where we're at today. So, what's hot and what's not? Let's break this down into different product. As you know, the metric that I use to gauge how active a particular market is the sales ratio. And again, all that is, it is the home selling rate or the absorption rate into the market every month for each product in each area. So if less than 11% of a particular product in an area is selling in a month, we're in a buyer's market, downward pressure on pricing. If between 12 and 20% is selling every month, we're in a balanced market. So it's not favoring the buyers or the sellers. As soon as we hit that 21%, which we're not seeing right now, over 21%, we're in that seller's market territory, upward pressure on prices, multiple offers, etc., etc. So that's what I use to gauge the activity in each area. Let's look at detached houses on the west side to start with. You can see what happened in the beginning of the year. We were already in that buyer's market, and then post-inauguration, we're at 6% and 8%. We had a little bit of a jump in the last month. Where are we at now? For the May stats, we are at 7%. So even a little bit softer over the past month. That, of course, is in buyer's market territory for houses on the west side. If we look at condos and townhomes on the west side, we were pretty strong starting in the year. We dropped down into that balanced market territory. Last month we were at 19%. Now we are at 17%. So you can see that activity dropping in attached condos, townhomes as well. West side, balanced market territory. Let's look at condos, townhomes downtown. I separate that out. Pretty slow over the year, 11% last month. Surprise, surprise. We bring up the stats for this past month, and it jumped up to 14%, still in balanced market territory. So going to the east side, detached houses, east side. We were in balanced market territory throughout the year. And this past month, we've dropped down now just into that upper end of a buyer's market for houses on the east side. Let's look at attached condos and townhomes on the east side. Very strong this year. Look at, we're up at 25%, 28% in January, down to 20% in April. Last month, we're down at 18%. So, of course, we are in balanced market range, but in the upper end of that for condos, townhomes, east side. Definitely a trend. And if you look at the different bands, the more entry-level pricing you have, the more activity and the stronger the pricing and activity has been. So again, if you look at the pricing pyramid, that will determine how active the pricing in the market is. So residential market conditions across BC, if we look at sales to active, generally we had that slowdown. So that's pretty well across the board throughout the province. If we look at what's happening overall with pricing, we've got that average price graph from 1977 to date. We can see detached houses, townhomes, and condos overall about 5 to 10% down from peak, depending where you are, what product it is, and what price range it is. It's really hard to give you an exact number. It depends what you have and where your home is, where your property is. So we look at the 5-year trend, sort of give us that overall backstep view of where we're at. And if you linearize that, again, it shows you've got the peak from last spring, but you've also got that peak post-COVID at 2022, about 5 to 10%. So if we break it down into the burbs, what's happening on houses detached month over month, you can see pretty well read throughout the Lower Mainland, a couple of increases in activities, Port Coquitlam, Burnaby, Cloverdale, and Abbotsford. You see the trend. As I mentioned earlier, the further out you are, the more affordable homes are. That's getting some action right now. If we look at attached monthly, month-to-month variance, attached, again, there's some entry-level product throughout the Lower Mainland that is boosting up that activity, and the sales ratio actually had a slight increase. So that's really interesting, but it's all about pricing again. So average price in BC, you can see that average price graph throughout the years. That's quite interesting. There's that peak back in 2022. Here's where we are today. And on average, 1 to about 1, we're about 10% down on the average price graph throughout BC as well. Interesting stat. What's going to happen? Well, nobody has a crystal ball, but what I can tell you is if we look at the factors, the price enhancers and the price deterrents and the transitioning factors, we can see consumer demand after an exhausting 3 months is seeing a little bit of a light at the end of the tunnel. And we'll talk about why that is. Why are consumers a little bit excited about this coming summer? Well, inflation is behaving. We'll look closer at that. The cost of borrowing is actually good. Variables and fixed rates are falling, so that's good news. And the inventory levels, it looks like they've kind of hit a plateau. I should do this, a plateau for number of listings out there, which means they're not going crazy. They're not dropping. We're hitting that flat plateau now. Likely until that market heats up and people start getting more and more product on the market. So, can you see the light at the end of the tunnel? It's possible things are looking better. Are we out of the storm? Let's find out. Okay, unemployment rate, overall Canada 6.7%, BC 6.1%. We've seen a little bit of an increase from that bottom in 2023, nothing extravagant. Retail sales are up, they're strong, people are spending money. The GDP, well, by the time the data gets out in the GDP, it's old. We haven't even seen that adjustment dropping in the beginning of the year yet, so I'm not going to look closely at that. But if you look at residential sales, we can see the activity also fell almost 10% year over year. There's been a lot less transactions this year because of the uncertainty. That's the word of the year, uncertainty. Nobody likes uncertainty. The markets, trading markets, real estate market, general public. People want to know where we're going. So that's why we've had less activity this year. If If we look at rental rates, we're at $3.12 per square foot. That's slightly down from last month, but it looks like the rental rates have stabilized now in Greater Vancouver. Across BC, if we're looking at the housing starts, there's a lot under construction. That seems to be going gangbusters. We sold a few building lots over the last few weeks, and there are builders building, and there are people buying properties to build their homes. So there's a lot of anticipation in that market when the finished product comes online. So that's good news. Inflation again at 2.3%. That's down from 2.6% last month. Surprising. We kind of anticipated a jump in inflation, but not the case. There's Tiff Macklin from Bank of Canada. The overnight rate is at 2.75%. He did say that the monetary policy cannot resolve trade uncertainty. Everybody's expecting Bank of Canada to solve the uncertainty, and they can't. They can't stabilize things for Canadians on the overnight rate. All they can try and do is maintain price stability. So that's an interesting statement coming from the Bank of Canada. And if we move on and we look at the consumer price index, more detail, boy, there's where we hit that peak in 2022, coming down to last year where we had inflation behaving. We're at 2.3% now. That's actually good. What I call the Bank of Canada happiness band between 2 and 3%. We fall within that, so there's no issue currently for inflation. Again, that can change depending on what happens over the next 6 months. So inflation's behaving. We are in sync with our neighbors. They're at 2.4%. We're at 2.3% for inflation. That's important. We want to be relatively close for various reasons that I covered in a few of my updates recently. If we move on to the cost of borrowing, which is of course impacted by that overnight rate, we are still continuing to see those variable rates fall with the Bank of Canada rate. It's anticipated we may see another rate adjustment downwards, a relaxation of the policy by maybe 25 basis points. Hopefully that will be the case. The variables will fall immediately. And we're also seeing all these issues that we're following, trying to balance, the Bank of Canada trying to balance all these impacts on the economy with the overnight rate. So that's kind of the fence walking that the Bank of Canada is doing right now to keep things as stable as they can. Now, buying power for today's cats. There's today's cat. What is this? This is basically just how many dollars per 100,000 borrowed that I like to calculate to show people when they're out there looking at product. If we look at a 3.99% rate, I have seen some fixed rates, 4-year, 5-year, hovering around 4%. That's pretty good. We might even see a slight drop in that. If you're kind of following the rates and you've got variable rate mortgage and you're wondering when to lock in, you might want to wait for that June announcement, see if there's another drop. You might want to lock in then, or they might continue to drop. Nobody really knows. There's a lot of factors that determine that. But for my calculation here, let's use that 3.99%. What that calculates to for every 100,000 you borrow is $527. So when you're doing that calculation, if you're borrowing $1 million, $5,270 to borrow that $1 million at this rate. So that's actually come down significantly for where we were in those peak rate periods. Inventory, what's happening in inventory? As I mentioned, across the province, that inventory is stabilizing. If we look at our various areas, west side detached houses, we are up from 640 last month to 720. That's a slight increase in inventory. Attached product on the west side, slightly up, about 100 units out of 1,000, so about a 10% increase. And on the east side, we're seeing about the same. There's been a steady increase of inventory, and also on detached condos, townhomes, steady increase from 658 to 731, but nothing dramatic, and we're starting to see that cresting. So the big question, what's happening with prices. Let's look at what we've done over the last 4 weeks. We've been busy. We've had lots of happy clients, lots of sales taking place on our listings. So that's good news. Thanks, guys, for the business. Very exciting. We call this, every time we do a transaction, we go to the back of the office where we have our wall of success. Our clients get to take a bottle of wine home, celebrate their sale. It's a lot of fun. And speaking of a lot of fun, I'm going to announce something else just after our conclusion here. So in conclusion, why you're all watching this, we are impacted by mortgage rates, inventory levels, and consumer demand. Okay, those are the things that we watch. So we have a new prime minister. It's been pretty exciting. We've had our election. We've got Mark Carney in there. He seems to have a pretty good relationship with the administration. That's hopeful. So people are quite optimistic about that. The Bank of Canada is likely to stimulate the economy further by more drops. Let's keep our fingers crossed, knock on wood, that happens. That's going to impact the market. Inventory levels seem to be stabilizing. They're not going crazy. They're certainly not dropping. So that's good news. And if we continue and look at the main points, the demand is still strong. We're getting a lot of people out in our listings. We're getting offers, and in many cases, we're getting multiple offers. So that is still strong. The variable rates are dropping, as well as the fixed rates, depending on those bond yields, tied together. So that's also good news. And the looser mortgage rules, the 30-year amortization, and the delay in the capital gains is also helping. And the U.S.-Canada trade discussions that were going on quite intensely last month have seemed to calm down. Is a compromise on the table? We'll see. But there's some good optimism out there. And accurately priced properties, as I mentioned, are selling, and in some cases, in competition. So we're starting to see some real optimism. There's a breath of fresh, warm air out there. I think the good weather is also helping us. In the sun, consumers are seeing a brighter and more stable summer. So is this storm over that we just went through? Are things calming down? And when things calm down and people see a little bit of stability, maybe we're going to see a fairly active real estate market over the summer. We've had this before, and we may have it again this summer. So let's see where we're at. And of course, home sales, a little bit down last year, is a prediction for 2025. And for 2026, looking better, the sales are anticipated to increase the number of sales. Now, this is a fun announcement. Now, every 2 times a year, semi-annually, we hold a seniors downsizing seminar. They're a lot of fun. We're doing our next one on June 26th at 6 p.m. I encourage you to give us a call. Just stop the video, zoom in on that QR code, and you'll be able to register. If you are a senior, you're thinking of a downsize, we're holding the seminar to answer all of your questions. Should you be renovating? Should I buy for sell first? What products are available? All of that we go through. You meet other people in the same situation as you. We got food there. We got some drink. It is a lot of fun. And we've just announced our next one on June 26th. So you or anyone you know that might be interested, I encourage you to register. That's my announcement for our community events. And that's my market update for May of 2025. I hope you enjoyed it. We're on YouTube, Instagram, and Facebook. And if you're looking for the podcast, we're on YouTube Music, Apple Podcasts, and Spotify. Thanks for joining me. I appreciate it. Have a wonderful May, and we'll see you back here in June.